What's up, traders? It's Mark Sebastian, your only option. Today, we're going to look at what happened with the SPX on Thursday and the VIX. We're going to preview non-farm payrolls on Friday, talk about where we see SPX and VIX moving from here, and I'm going to give you that one stock that you need to pay attention to on Friday. So with that, let's dig in. All right, so really interesting trading behavior again on Thursday. We just continue to see lots and lots of intraday movement. The S&P got below its 200-day moving average for the first time in over a year. Didn't even do that in August. So you got to go all the way back to October of 2023 for the last time we even crossed the 200-day moving average. If you look at this yellow line, this is average true range over the last 10 days. The S&P is moving 93 points on average per day over the last 10 days. That's more. That's almost, that's like 1 3/4%. Just huge movement out of the S&P. Obviously, vol, the cost of options is also climbing, but it's not climbing at the same rate as movement. So right now, options on the S&P are relatively cheap compared to what you're being charged. Speaking of the SPX, let's look at what they're pricing in for non-farm payrolls. As we're recording this, the S&P is right around 57.55. They're pricing in the calls are about 45.50. The puts are about call it 44. So we're talking almost $100 of movement priced into non-farm payrolls. Friday is going to be a wild one. Looking at VIX, it continues to sleepwalk. I know we got we got a pretty nice kick on Friday, but we didn't even break the highs from Tuesday's selling. So we continue to see this kind of slow walk climb higher out of VIX. It closed at its highest level since December 18th when it got to 27. But essentially, it's been kind of slow climbing. So this setup tells us, one, we could see VIX really blow higher, or things could collapse pretty quickly. Right now, VIX futures term structure, this is called backwardation. The VIX, this green line, is trading above March, which is trading above April, which is trading above May, which is trading above June, and then we're flat behind it. When you see this formation, bad things happen to the market. Bad things happen. So what would be the bad things? Well, I want to show you one more pattern in the S&P 500. And it's just been kind of happening for the last 2 weeks. So we get a test of the 50-day moving average on the 21st. Break it on the 24th. 1, 2, 3. And then we break the 100-day moving average. 1, 2, 3. Break the 150-day moving average. 1, 2, 3. If this pattern holds, we should get a huge down day on Friday. Now, this is the 200-day moving average. That is a major point, a sticking point. A lot of traders look at that as, we get below there. Now the S&P is entering some oversold territory. But really, we're off 400 points. 450 points, so not even 10% yet. So these moving averages had gotten really close together. So that's why there may be room. If we get some selling, our ultimate low may be the August low or the September low down at about 5,400. We've already taken out every other recent low. So 5,400 maybe. That would put us down about 700 some odd points. That's more than 10%. So the market is in flux. You do not want to sit here and think this is buy the dip time, because it's not. Buy the dip time is when we break back over the 150-day moving average securely. That is when you kind of think about buying the dip. Buying the dip is when we see the market down and volatility pulling back. All right, so now what stock should you be watching with all this? So there was the 8th biggest stock in the world, sometimes 7th, AVGO, reported earnings Thursday, and they blew the doors off. AVGO is up 8% after the bell. The market was looking for about 8.6%. We're moving about 8.6%. So the movement is in line. This stock had great earnings last time. They sold it down to this earnings. These earnings were great too. AVGO could be a really interesting long-term bear play if the market can get out of this. Bull play, excuse me. So what would that long-term bull play look like? Maybe I'd go out and buy some, some cheaper calls, something like the April 200s, April 210s. The April 200s will probably be about like $10, something like that. That would probably be what I would be looking at. All right, everybody. So there you have it. There's the market. Be prepared for non-farm payrolls. I am Mark Sebastian. If you're watching me on YouTube, like and subscribe. Leave a comment or a question, and I will answer it. If you are watching this in email, then hey, make sure you check out the stuff that's the stuff above me and look into it. Definitely worth your time. All right, folks. I'm Mark Sebastian. Your only option. Have a good one.